Underground, overground, wombling free. Wombles of Wimbledon, coming are we. Oh, dear me. Well, boys and girls, got my coffee. Saturday morning. Must be coffee with Scruff. What are we discussing today? Well, I'm going to help a long-term supporter, Neil. Salute to you, my kid. Why? Well, let me just quickly grab a coffee, flick something over, and I'll show you, because I want to keep something in the background as well, which is this particular chart. So give us a second. Oh dear. All know Scruffy likes a coffee, and he does. Right, this will come into play in just a moment. And it's going to be part of the talk. Because it's about little and often and setting targets and various other bits and pieces. Let me show you. Now, this is a video I did about 5 years ago. It was 5 years ago. And there's a chap follows me, Neil, here. Little salute to you. I'm very kind for the super support. Goes to a good cause. Do check the old catalogue. And if you comment on them, I will respond and I will come back to them. As I am here, because this video is 5 years old. Okay. Give you some little love there, son. Should have done it when I see it. As you know, you've been following jumping pillar to post strategies, etc. When it comes to strategies, you only really need one that you're comfortable with. Doesn't matter what it is. And it's why a lot of people spend a fortune jumping from this strategy to that strategy. And, if I only know this and I only know that. You don't need to spend your money to do that, guy.
Fuck no!
You just need to find something you understand. And ultimately the charts, and I'll show you it on a chart in just a second. All these stupid things that you see. So, this is the latest gimmick. It always works. And then you're there going, yes, of course it does. So there's my £1,000. Thanks very much. £1,000, there you go. Well, it don't work. It don't work. I've lost my £1,000. Yeah, you have, because you're a fucking dickhead. Why? Because you paid £1,000 in the first place when everything you need is in front of you.
Dickhead.
I'll show you. Right, sorry, getting on a bit of a rant. I'm going to try and be behaved this week because I've had a right shit week. And sometimes when I get out my box, I really do. But that's because I deal in a strange environment. And that strange environment is the trading world. And the trading world, unfortunately, attracts a lot of horrible people. But it also attracts some wonderful people. Like Neil, which is why I'm doing this. So, let me read it through. If you've never been here before, I have a sort of tendency to go off on a rant from time to time, okay? Because that's old. You know, why I need me coffee, calm me down. Should actually be laced with bloody gin or vodka or something.
You need to calm down.
Anyway, put that to one side. Oh, God, I do like that. Right. Has all the freeloaders fucked off yet? Because I do that at the beginning of each video, guys. I always ramble on and make it out as if it's a complete lunatic show. And it's really to get rid of them, because they will just click off the video and go elsewhere. Right, now let's get into this. As you know, I've been watching you for a while now, and I must have gone through this jumping post pillar, different strategies, etc. We all know that kind of story. And to come back to the Bollinger Band. The Bollinger Band is a great strategy, guys, because the Bollinger Band will show you the strength in a market, okay? And strength is key. You got your levels in place. You got your strength in place in the direction. It will forgive you bad entries, okay? And then you use various management systems and you'll be fine, okay? So there's that bit. I just want a bit of advice, because you've been working weekly and monthly time frames. Excellent. Maybe look at the daily, because the monthly and the weekly are fine, but they can be sometimes a little bit too far removed from what's happening today. But the daily's pretty much in the moment. And then if you take it down into your 4 hour and your hourly, then you're pretty good. But there's nothing wrong with being in the higher time frames, but the daily is the one for day trading. Okay? And it's drastically changed for the better. And you cut down your trade to just 20 quid a day, and I'm finding this so much easier, it's unreal. It certainly is, and I'm going to come back to that. That's why I showed you the MT5 at the start. 60 quid a week, no trading on a Monday, very good. Friday, definitely. I'll trade Monday over Friday any day, but preferably the times are, don't trade Monday morning, because that's the money flow coming in, and you don't rightly know which way it's going to go. And on a Friday afternoon, the money flow is coming out, and you don't know whether it's coming out, whether they're stalling, holding, or anything. But if you're caught in a bad trade, you're stuck with it for the weekend, sort of thing. So Friday is like a no-go. As soon as it hits lunchtime Friday, just forget it. All right, so that's good. So what you're doing is right, and your little checkpoints are in the right place. Okay, so don't worry about that, and you hopefully look to pass in 14 weeks. As a loss might be as well, and that's on the right track. As a snapshot, yes, you are definitely on the right track. Now, let me give you an example. Now, this here, okay, I'm looking at an hourly. I am looking at a Bollinger Band, just the same as what you are. And the principle that I'm building this account on, now this is Bitcoin, so I can use it on a weekend, BTC. It is a derivative, so it's just like a standard trade rather than buying the physical asset. And I'm looking for this to short. Now, why am I looking to short? Let's just take a quick look at this. Okay, all my levels are in place. If you look at it like this, it looks fucking scary as hell. All right, but if you look at it down here, now this isn't so scary. I have fantastic areas that I can trade in. I've got clear entry points, clear sort of exit points, if you like. So I'm now caught between the purple and the red inside a full arena. All right. So I'm in what's called a golden eye zone because it's roughly in the center. All right. Now, the view of the market on the 15-minute seems to be going down. Excellent. It's holding below the underside of this Bollinger Band. In other words, underneath that moving average. It's bouncing around it. But there's no strength in it. Okay. But that doesn't mean anything, it just means it's relaxing. Now, here we are, which is where the signal would come from as to why I want to trade it. And it's also why I've only got a pending order in, because down on the 15-minute, it isn't showing a great deal of sign. So I'll just have the order sitting, waiting for it to come. But it's underneath that moving average coming from the top. Yes, that's pulling up, but the Bollinger Band has collapsed in, so there's no more strength to the upper side. Now, what I can do as well, just to make this a little bit easier for me, is put a fib on. And what can I see? Well, it's following the key ratios of fib. It's broke a 23 and it's bouncing on a 38 with a view to get to the 50. The 50 happens to tie in with a higher time frame fib, and everything else balances up. So this is a short market. My little quick sort of compass, my Scruffy pilot is telling me it's down as well. It's also telling me it's an F, so it's not particularly good. Now, I don't rely on this. That's just the magic keys. So just buy yourself a magic keys if you want one. I rely on this because this is a snapshot of my analysis. And my analysis has told me to sell it, says it's pretty good, and that's all I need. Come back to this, okay? I'm going to let the candles move up for them to come down. Right, so that's one part of the puzzle. And the part of the puzzle that we were looking at there was just deciding whether I want to go to market in the first place. Yeah, why not? It's okay. Now's where I come to help you. This, for anybody who's following it, is something that I'm actually doing for one of the other guys in the squad. And you're very welcome to come to the squad. And one of the good things with it is you're not tied to it. So you're not going, earn me £1,000. No, YouTube own the membership, so you can come and go as much as you like. And there's thousands of videos. There's 5,000 videos on the channel, and well over 2,000 of them are just for the members, based on in-depth sort of analysis, so you can work out what's going on and see it in real time. And you will see it in real time because I go live 4 times a week. Okay, so If I come to this growth tracker, now 15 days ago, 2 weeks ago, Wayne said he would like to put sort of 40, 50 quid into an account on Bitcoin and just trade it gradually. So I said, all right, I'll do it with you. And I did it in the summer. You'll have seen that, where we did 15 quid. And we took that up to 250, and I bought a holiday with it. You know, why not? And I'm away again at the end of this month, which is what this will do. So my initial target of this was 100 quid. Okay? And I put 45 quid in it. So I wanted £100 worth of profit. Well, I'm at £153 worth of profit. But look at this. It's just chipping away. Now, one of the other chips is look at psychological numbers. Now, today, I'll be coming to a psychological number, not on the chart, in my head, of making the account 200. So in order to do that, all I've got to do is today's target, which is 397. So instead of swinging for the fences, I only need to do 397. Or if I just want the psychological number, because you don't have to hit your sort of growth targets every day. They should be just sort of there as a guide, because you don't want to force trade. I've only got to do 2 quid and I'll hit £200. I'd be quite happy with that. Now, for those that start twisting on going, it's only 200 quid. Yeah, 200 quid's add up, mate. And I'll show you that in just a second. So we're just going to let that run up, and then I'll flick over, and then I'll show you what 200 quid's actually build up into. Right, I can get a better price now, so I'll move that up to there. So I've only targeted 2 quid for this section. Why? Because who's to say you have to do it in one go? Well, you don't. So that's another element. You think that, right, I've got a target of 50 quid. You don't have to do 50 quid in one trade. You could do 50 quid in 5 trades. You could do 50 quid in 2 trades. You can do it in 10 trades. Just depends on what you are. What you've got to remember when you go into the charts is the charts don't often give you the big moves when you need them. They always give you the big moves when you don't need them. In other words, the opposite direction. So the more you're in the markets, the more you're at risk. Now, the scalping, you know, a day trade like what I do is technically a scalp because it's under a 24-hour period. The difference is I want some decent meat on the bones. So I think anywhere from 6 to 10 pips is pretty good. But if you're doing high frequency scalping where you're only getting 2 or 3 sort of pips, but you're trying to do it 50 to 60 times a day, that's suicide, right? There's not a trader in the land made it, okay? You can say as many as you like on TikTok saying they have, but trust me, they haven't, you know. The broker I'm with, I asked for the stats. How many scalpers have actually made it into a living over the last 5 years? And the answer was 0. Fucking none. But it's the definition of a scalper. Let me explain this. A position trader will put a position on in January and hold it through to December. They have a very high success rate. Why? Because they're not tinkering with the markets. Swing traders is anything over 24 hours to 2 or 3 months, 2 or 3 weeks to a couple of months. They have a high success rate. Their win rates are relatively small in both of them because they have to kill off the losers relatively quick. But there's a difference between their version of a loser and a scalper's loser. You see, a swing trader will take a hit for 100 pips or so. It's not really a problem, all right? But the upside is 200 or 300 pips. So one balances the other out. Now, you've then got day traders. This is where I sit. I predominantly sit with the day trader. They're looking to go to market once, twice a day, but with some decent meat and decent size. Okay? So you're looking at 1 or 2 trades a day, half decent size with a half decent move. Now, that move is, as a baseline, around 10 pips per trade. Okay? So 20 a day, 100 pips a week. It's not bad. It's okay. But we're not in the market as much as you think. So again, it's relatively safe because everything is orchestrated and planned. But then you've got high frequency scalping. Now they're the guys that'll take 2 or 3 ticks out of the market and they'll try to do it 50, 60 times a day. That means they're exposed to the market constantly. Not only are they exposed to the market constantly, the wins are so small, it only takes 1 or 2 bad hits. It's all gone. So their ratios are completely out of whack. Their return on investment, it doesn't even register. That's why they fail. They're in the markets way too much. And sadly, that's the way this industry is portrayed. It's always portrayed as exciting and you're in the markets all the time. No, you should be planning to be in the markets all the time, not actually in the markets. There's a big difference. So when you've just seen that chart, it hasn't triggered yet. And if it triggers, I'll switch it back on for you, but I just wanted to show you it. It might take an hour, whereas a high frequency scalper would be down on a minute chart trying to get every nuance of that market. Well, that's where they fail. All right. So where am I going with this? Now, the idea was it really is coming back on to planning. And this is the advice I want to give to Neil. Don't overstretch to the stars. Do something you're really comfortable with. And once you've paid, quit. So in this case, you're looking for 20 quid. Now, 20 quid mightn't sound much to a lot of people, but across a year, it is huge. And you'll be surprised how much that's actually worth. Now, let me just flick this back over. As you can see, it hasn't triggered yet. And we'll just drop the calculator on. So if you're looking at 60 quid, okay, and you sort of work on a 4-week month and then work on a 10-month year, what that does is when you've got the 5-week months, it kind of allows you to have either a little bonus or offset a little loss, and working on 10 months is the same principle. It's all just about using the figures to make your mind comfortable, psychological numbers, if you like. So you're going to have time off and you're going to be wrong. So 10 months. So think about this. So if you times that by 4, times 4, 240 a month. And you think, well, that's not all. Okay. Now you times it by 10. It's 2.5 grand or 2,400. What that's just done for you is if you're on a standard salary, like sort of in the UK, it's about 20 grand a year. It's like national wage sort of salary. You just give yourself a 10% pay rise by doing relatively small elements. Okay. So what does that tell you? Well, it tells you it's common sense. You could have just paid for Christmas, just paid for a family holiday. There's lots of things that you could have done. 2.5 grand goes a long way. And do you want to know how far it goes? Let me log into something and I'll show you how far it goes. Okay. So what I'm going to do is I'm going to flick over onto my Vanguards, etc. Let me just put this into place. Because I track this as well. Now, I nearly had it. Well, it did hit 150,000 the other day and it's dropped. So I need to adjust this. Okay. Because as you can see, I had it at 149 and it's dropped back somewhat. But I'm also working on this. Now, this is 10 grand to 50 and I'm up to 14,000 and I only started it recently. So there's what the performance is as it is now. So we have, could do better, couldn't it? Could do a lot better. All right. So the ISA part of that is now down 45,164.07. And the other pot, which is the pension pot, that's dropped as well. 102,706.69. I'm not worried about that, you know, because it's growing and it'll just bounce up and down and I add into it. But 5 years ago, this pot, you know, the whole portfolio, only had a few £100 in it. Had a couple £100 if it was lucky. Now it's got a huge fund by just drip feeding in. Transactions, they're relatively small, okay? They don't have to be the biggest in the world. There they are there. A couple £100 each time. But now, as you can see, we started another one, dumped 10 grand into an account and we added it up. So there we are. October, we've got £1,600 into it. This month, we're only 8 days in. I've got 2.5 grand into it this month because I've cashed a couple of things out, cashed a couple of props, one thing and another. And just so you can see, because it's all well and good seeing it on a spreadsheet, there's the bank account. And why? Because I'm going to build this up and I'm going to be looking to buy another house. All right. Now, this is a 5 to 10 year plan. I'm looking to get 50 grand into that over the course of the next 18 months. Ideally, I want 100. But psychological number, 50 grand is about right. So if I can do that, outstanding. Now, the trade that I was looking to put on, it's actually changed its criteria somewhat. That is there. It hasn't triggered. It's running up. So I'll just move that to there. And it might take it a couple of hours before I actually get into this particular trade. But when I do, it just has to roll over. Now, if I alter that target to just say £4, we fine. And then just so you can see that it's not a fluke or anything like that. Didn't get anything. I don't get it right all the time. Take this back. There's its start, £45, whatever it were. And then just run it down. Bing, bang, boo. All little marks, red marks, are killed bloody quickly. And I always have petrol in the tank just in case something goes wrong. There you go. Now, each one of them, you might think, fucking hell, look how many of them there is. Bah, 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 bah. I split trades and I trade once or twice a day on a trade idea. Now, that's not high frequency scalping. What it is, the 10p trades, and it's like a £2 win, a £1 win. So they're all 10 and 20 pips or 10 and 20 movements of price. You know, whenever I go in, I try and 10 times the position. That's the first order of my sort of way of thinking. So if I put £1 in the market, I want that pound to give me £10 back. That way, it helps me with numbers. So that was for you, Neil. I genuinely hope what I say to you kind of makes a little bit of sense. Now, to me, it does, in the sense that I take controlled steps every day. And I'm not there to be sort of a sprinter. I'd rather be a marathon runner, you know, steady pace, but I'll go a long way. And the idea of showing you the two bank accounts, it's not to be boastful. It's to show you that those little steps that you're taking can become something pretty substantial in the future. Because your 2.5 grand in the first year will set you up for next year. And suddenly that 2.5 grand could easily become 5 or 6. And then 5 or 6 can become 10 and 20,000 in year 3. And you're thinking, well, it's 3 years. So what? Because what you got to remember is if you put it in an investment account like that, because I don't hold money in a broker. I only hold money in a broker what I need to service the trade. All of my trading is held inside a bank account, in this case, the Vanguard. I hold my trading funds in there. Okay? Why? Because money means nothing unless it's in the bank. You can have the biggest broker account in the world, but it's worthless, pointless, till it's in your bank account. And that's the way to think. So your little steps are superb, and don't let anybody tell you otherwise. When it comes to following a Bollinger Band strategy, I like a Bollinger Band. I always have a Bollinger Band in my eye shot because it tells me the state of play of the market. And if you understand the 4 states of a Bollinger Band, you're halfway there. The other half is the levels that you put on. And then, let's be honest, the price is going to hit one of them. You've just got to decide which one. And the Bollinger Band can help you do that. So as always, guys, trade well, keep your risk managed, but above all, do what you love. And the money will follow. See you all in the next one.